Hi, this is John Lynch, Chief Investment Strategist for LPL Financial. Welcome to this edition of LPL Street View Video. Despite the strong year-to-date performance in equities and bonds, we'd like to discuss some of the mixed signals offered by the economy and the yield curve. In the coming weeks, investors are about to receive report on first quarter GDP, which we expect to be weak. Now, I want investors to be mindful that historically, first quarter is seasonally weak. Secondly, I want investors not to get caught up in the backward-looking data, but rather look at the forward-looking data, whether we're looking at leading economic indicators, whether we're looking at firming in housing and autos, as well as what we just experienced was a 50-year low in jobless claims, which is supportive of a consumer doing better going forward. We've also seen rising incomes north of 3% on an average annual basis. In addition to the consumer, we believe any clarity on trade will lead to a resumption of business investment in the second half of 2019, which would also serve as a boost to growth for the remainder of the year. I also want to address the yield curve because there's a lot of confusion out there as rising short rates are moving faster than long rates, and that interest rate differential or spread narrows on the yield curve. There's a great deal of concern that that flattening yield curve can invert and cause the economy to slide into recession. We don't believe that's the case. We think what's driving the long end of the yield curve, when you buy a bond, the price goes up, the yield goes down. We believe it's purely a valuation issue relative to the U.S. Treasury bond compared to the German Bund or the Japanese government bond, which are yielding essentially zero, while the 10-year Treasury can reward investors with a yield of approximately 2.5%. So in conclusion, recognize that in spite of the market strength relative to equities and bonds, we believe in the coming weeks, investors are going to be challenged with some concerns relative to economic data as well as the yield curve. But remember, focus on the fundamentals, a strengthening consumer, clarity on business investment, and if the yield curve is suggestive of valuation rather than recession, we believe the financial markets can continue to expand for the remainder of the year. Thank you.